Welcome to the Transparent FX Academy. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which is in a very strong bullish trend. We can notice how the market already has created a series of impulses and corrections, and the development of this bullish trend has come after the break and retest of this quite important historical structured zone, which was holding this market to the downside for multiple years. After the break to the upside, the market retested its zone and this bullish uptrend started. And all this push to the upside is actually fueled by strong institutional buying of gold. And that is something that we will be speaking about in just a few moments when we move to the commitment of traders analysis to see what institutions are doing on gold and how they are moving and shifting their positioning. But for now, let's keep in mind that here in the monthly, the market is in a very strong bullish trend, coming as a rejection from this breakout of this historical structured zone. What we can also notice is that the last movement was the creation of this new impulse to the upside right here. The next logical step would be to see the correction and then the continuation to the upside, because what we know is that in uptrend is a series of impulses and corrections which create higher highs and higher lows. That is the definition of an uptrend itself. So the next logical step after an impulse would be to see the correction and then the continuation to the upside. Dropping down on the weekly time frame, what do we see? Now here in the weekly, we can see how the market essentially has now entered into a weekly range. We already had a couple of tests of the high of this range. The next logical step would be for the market to want to go and test what we have at the low of the range. So we can see that already in multiple occasions, the high has been holding as resistance. The low has only been tested twice. The next logical step would be to see another test here of the low of the range before then getting more bullish continuation. What we essentially have here is a clear example of a ranging market from a weekly standpoint. And since, as we will now see in just a few moments, institutions are already buying gold, a test of the low of this range would be a very good opportunity for more institutional buying, further increasing the probabilities of then a potential rejection higher. Dropping down on the daily time frame, what do we see? Now here in the daily, we have to notice that this level here, all this zone right here, is a very important area here for the gold market. And that is because we have three lows that essentially have been printed inside of this zone. And we can easily notice them right here. We have this previous low here, this previous low here, and this previous low here. Now, why are lows important in the market, especially if we are already seeing institutional buying? Well, that is because most of the times retail traders will place their stop losses below the previous low. The previous lows in the case of an uptrend are very strong and concentrated stop loss areas. For sure, you have seen already and you have experienced this in the market where you are long, you buy essentially, and you have the stop loss below the previous low. The market then goes, takes out your stop loss, and only after taking out your stop loss continues higher. Now, that is a clear manipulation. It's called stop loss hunting. I'm sure you have heard of this already. And the entire idea behind it is that, as you know, in the market, for every buyer, there needs to be a seller. For every seller, there needs to be a buyer. If there aren't enough sellers in a specific moment and institutions want to buy, so there isn't enough liquidity for them to actually buy, triggering stop losses is a clear and easy way to actually generate the liquidity, because in the case of a buy, a stop loss order is simply a sell order. So the stop losses, when they get triggered, create a massive sell event, and all that selling liquidity can be used to actually buy, so to take the opposite side of the trade. And that is why very often you see the market go, trigger all the stop losses at the stop loss area, and only then continue higher. So I wouldn't be surprised at all if the market here will go trigger all the stop losses below these lows, also testing this area right here. And at that point, we get strong institutional buying, potentially pushing the price higher. Speaking about institutional buying, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, the first thing that we have to keep in mind is that if we are looking at the data for gold, we're actually already looking at gold against the USD, because all currencies and commodities on the spot are traded against the USD. So when you're looking at the data for gold, you are already looking at gold USD. And what we can see here is that with the last reports, net positions have been constantly increasing. We went from the low here at 161.2K all the way up to 253K net positions. So we had a huge increase of net positioning, showing how institutions have been moving back to the bullish side for gold, with 41,000 longs added just with the last report, reaching 311,000 longs compared to only 58,000 shorts from an institutional perspective on gold. So clearly very strong, and the price action we have already seen that has reacted to all this institutional buying, moving higher. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So in a situation like this, if the market will now go and trigger all those stop losses, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this strong stop loss area. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.